And instead of that, you became a leg breaker. Some cheap, second-rate loan shark.
It's a living?
It's a waste of life.
I figure if I break the guy's thumb, he gets laid off, right? He can't make it.
Yeah, well, don't figure. Let me do the figuring, okay, Rock? From here in, just let me do the figuring.
Come on! Want to hit on me? Come on! I'll break both your arms so they don't work for you.
$50. You and your girl Adrian, you have a nice time, eh?
Thanks.
Hey, Rob.
What?
Remember what I told you?
What'd you tell me?
Take her to the zoo.
Come on! Come on!
Do you believe that America is the land of opportunity?
Yeah.
Paulo Creed does. And he's going to prove it to the whole world by giving an unknown a shot at the title.
I need your help about 10 years ago, right? 10 years ago. You never helped me. You didn't care.
Well, if you wanted help. I say, if you wanted help, why didn't you ask? Why didn't you just ask me, kid?
Look, I asked, but you never heard nothing. Nobody's ever gone the distance with Creed. And if I can go that distance, seeing that bell rings and I'm still standing, I weren't just another bum from the neighborhood. I mean, who am I kidding? I ain't even in the guys' league. Wish me luck, I'm gonna need it.
Good luck.
Don't leave town.
I don't believe it. Hey, the champ is down.
Down, stay down.
Okay, guys, I'm going to go get Jim Bianco now. Let's see, a little bit more time. Yeah, so I'm going to get Jim. Let me invite guests, copy. Let's send it on Twitter to Jim. Okay, whatever. All right, here we go. Inviting Jim Bianco. Let's see if he comes in. Get my chat up. Where's my chat? Here's my chat. Hey guys, hello from the UK. Thoughts on Coin Bureau's recent video, how bond markets are central banks controlling governments over the UK? Well, we can ask that. Fred's in the house. Central banks. Everybody wants to know about central banks. Let's see. Still 1 minute. Let me make sure Bianco is here. Let's see. Let's go to some of his charts also. Okay. Okay, here we go. Go to this tab instead. Okay. All right. Afternoon from New Jersey. Hey, Zane. How's it going? Danny from the Netherlands. Sorry for your loss. Oh, actually, no. Wait, you won the Netherlands. Excuse me. Netherlands versus Turkey. Yeah. Okay, waiting for Jim Bianco. Let's see, it is 9. Let me check. Idaho in the house. I don't know. I've got, I don't know how many people are looking. I'm not going to worry about it. Let's just go to, let's see if Jim is here. Jim. Okay, wait. Did I get the time wrong with Jim? Okay, 9 a.m. PST. That's good. Oh, send connection. And maybe I have to email it to him. 1 second, guys. Okay, guys, 1 second. I think he's not to podcast to Jim Bianco, and now to get my connection info. 1 second. I guess copy. Okay. Okay, I sent it to him. He has the info. Let's just check now. Nope, still no Jim Bianco. The behind the scenes setup, very authentic. Yeah, well, it's my office. Yeah, so this is average purchase point of all 10 Bitcoin ETFs. So this is to say that everybody's underwater, right? So the purchase price is 60,000 or 56,000. Right off the bat, I don't know. Have you been in Bitcoin for more than 10 minutes? What do you care about this? And I don't think anybody cares about this. But I'd be interested in knowing what Jim thinks about this this chart. What other charts do we have here? There's another thing. Average size of a trade. So we have small trades relative to the QQQs or the SPYs. We have much smaller trades. So, okay. Doesn't surprise me. People are tipping. Oh, here we go.
That I had a couple of technical things I had to work through.
No problem. Welcome to the Kruger Show.
Yeah. So how's the Kruger Show work? How often do you do this? When do you put this out?
I have absolute. Look, Jim, I'm a complete amateur. That
makes two of us.
I never expected in my wildest dreams that I would have any interest in being on Twitter or on YouTube ever. And I put out one video in December, which just kind of blew up. And, I kind of said, hey, these ETFs are going to be a big deal. And then the ETF got approved. And then I said, okay, that's it. I'm done. And, and then everybody said, hey, don't go. We like you. And I was like, okay, maybe I'll stick around a little bit. But I'm not a professional. I have no interest in being a professional podcaster or anything else. I'm an independent investor. I've been investing as long as you, actually a little longer. So I looked at kind of where you got your MBA, I think, in
I'm 61.
Yeah. Okay. So I'm 3 years up on you almost, right?
Okay.
Yeah. And
So
so
two old decrepit boomers talking about
yeah, definitely two old decrepit boomers. Yeah. So
Should
yeah,
we pass along warm milk and oatmeal strategies while we're at it too?
yeah, exactly. Yeah. So my background, just to kind of give you a little thing. So I went from Stanford PhD. I was one of the first quants on Wall Street. I was part of Solomon's arbitrage group. Okay.
Okay. So that's got to be pre 94 or something like that before Solomon became.
No. It was so Solomon, the John Merriweather. We had the bond trading scandal in 1989.
Yep, the 2-year note. Yep, the 2-year note. I remember it.
Yeah. So that was my friend Paul Mosier,
Mm-hmm.
who spent a little time in the big house. But you know, we're actually still friends and everything. So yeah. So basically, that was 89, and then I left to join Greenwich Capital in 89, and traded another 3 years. Made a lot of money. I was one of the top paid traders in that period. I mean, like top 10. And then I quit and I started doing companies, and I've done 10 software companies and internet companies, and I've had about $500 million in exits. So that's my background. I got into crypto kind of late, and I've been in Bitcoin really since 2020. 2019 has kind of got the religion in 2020. So I'm a Bitcoiner. And
you call yourself a maxi?
I do call myself a maxi. I started by calling myself a quasi maxi. But then I sort of I dropped the quasi. So I've been through a lot of the you know, I've been through the entire cycle of you know, going from Bitcoin is not going to make it. You know, we need something faster. We need something more, you know, faster, cheaper, all those things. I've been through that whole cycle a long time ago, 2018, and now I'm very much a maxi, right? So I'm and you know, I hold a very, very significant part of my net worth in Bitcoin. So I'm kind of the 60-40 rule: 60% Bitcoin, 40% QQQ.
Okay.
That's kind of my philosophy.
You're having a good year, man. You are having a good year.
I'm having a good year. I'm having a good couple years. Okay. And I'm not a trader anymore. So I went from being I would say I was a degen on Wall Street, like literally a degen, right? And but I was an ARB degen. I just put on ARB trades, right? And but you know that I wasn't holding them for that long. You know, you'd hold them for a couple months, 3 months. You'd reassess. You'd move them out. Yeah, that was my life, right? To now being very much a long-term holder. You know, very much sort of, and all my kind of Bitcoin kind of interest is really all super long-term. So that's kind of where I'm coming from. So,
well, let me tell you where I'm coming from.
Yeah.
So, you know, I graduated my MBA in 1990. I actually was working on Wall Street before that. If I was to go all the way back, I was in the equity research department at First Boston, which is now Credit Suisse, which is now UBS.
At the same time, and the same time, Fink was there.
You know, it's funny because I literally started, you know, in the summer of '87.
Okay.
And like the first week I was there, my boss in the equity research department introduced me to this guy named Larry Fink, and he was just leaving the same week I started, and he's going to go start some black thingy or another. And good luck to him, and see how that works out.
I can kind of add to that. Guess who one of the very first people he hired was?
Don't know.
Fred Krueger.
Oh, you worked for him right out of the box, right there back then.
No,
okay.
So I went to Solomon Brothers, right? I had made a kind of a name for myself, right? And I got hired by BlackRock, and so I spent a day there, okay, and they were like, this was a 30-person company. Okay. It was maybe a month old when I joined. It was on right next to Bear Stearns on Park Avenue.
Yeah, that's where First Boston was. They were at Park Avenue Plaza, 53rd.
Yeah, exactly. Right. So I went to
Right.
that building. I reported to work. I was talking to Larry. I met with all the guys. It was like 30 people in that office. And I was like, so wait a second, this is Black Rock, not Black Stone. And they're like, no, we're kind of we're kind of like a spin-off of Black Stone. But Fred, we're really thrilled to have you here and everything. So then I went back and I was sort of John Merriweather was like, Fred, you cannot leave. You can't. What are you doing going to BlackRock, this little tiny company? And so I said, he goes, no, we're going to go out tonight and I'm going to take you drinking. So I basically went out that night with John Merriweather, and he's like, you're coming back to Salomon Brothers. And so that was my one day at BlackRock. So yeah.
I got a quick BlackRock story, and then I'll give you the rest of my TLDR. Stephen Schwartz, of the founder of Blackstone.
Yes.
Whenever he spoke at an investment conference, they asked him, "What's the best investment you've ever made?" And he says, "Oh, that's easy. It was BlackRock. We invested in BlackRock as a startup, and it went up 200x." And then they asked him, "What's the worst investment you ever made?" He says, "Oh, that's easy. That's BlackRock. After it went up 200x, we sold it, and it went up another 200x after that." I mean, just how unbelievably successful that thing has been over time. But to finish off, so, I go back to, I was at equity research at First Boston in '87 crash. I moved to UBS in '89. When I say I moved to UBS back then was called UBS Phillips and Drew, and there was maybe 80 employees.
UBS, what was it called?
UBS Phillips and Drew at the time.
Oh, right. Okay. Yeah.
Yeah. And there was maybe 80 employees.
Oh, really?
Kind of disillusioned with that a little bit. And then I moved to a small brokerage firm in Chicago. I'm from Chicago, still in Chicago, called Arbor Research and Trading. And I worked for them from 1990 to 1998. And in 98, with the help of Arbor, I spun myself off as Bianco Research in this 26th year now. As far as, and we provide macro research. Our bent is more fixed income than it is macro. So my wheelhouse is more of the bond market. But in the middle of 2015, I became aware of Bitcoin. 2017, I started investing in Bitcoin. And I've been long all the cryptos in Bitcoin to some degree, not as much as you, since 2017. So I've been in the space, I shouldn't say I'm in the space. I've been investing in the space and been very curious about the space for about 7 years or so. I probably started off in 17 to 20, probably better describing myself as a maxi. But then I fell down the rabbit hole of DeFi summer and really became enamored with ETH. And as we get into it,
right? Is it 2020?
Yeah, 2020.
Yeah.
Yes.
Yeah. Okay.
And as we get into it, I think that, this is the missing, in fact, I'll go there right now.
Go ahead.
This is the missing link that's holding Bitcoin under 100K. That's going to get it up to several 100K in my opinion. I'm still long. I still think the space is positive. What the space needs is much more adoption. What's going to get it adoption is going to be an ecosystem around Bitcoin. It's not good enough to say it's the blockchain. It's got a fixed inflation rate that halves every 4 years. It's permissionless in its issuance. Good enough. Here we go to 1 million. That's good enough to get you to 100,000, and it's already been in the low 70s. What it needs kind of what I think what ETH has. It needs an entire ecosystem of trading and lending and insurance and borrowing, and a whole system around it. And that's where I thought the developers were going, or I shouldn't say thought, the developers are going in that direction with stats and even the Lightning Network from 7 years ago, although I don't think that's been very successful. The Lightning Network and runes and a lot of other things that's in more of an NFT, that they're moving in that direction. And I thought that was good. So let me come to the ETF. Let's get right into it. My biggest concern, the argument people say is that the ETF is the gateway. we're going to, Eric Balchunas just tweeted out 10 minutes ago, the boomers are holding tough because there's not been any outflows now that we're down in the mid to high 50,000s.
Yeah.
And I just tweeted back at him, there are no boomers. There are no boomers in these ETFs. It's a small rounding error. BlackRock has already said 80% of their buyers are self-directed online brokerage accounts. And some people come back to me, well, that could be a boomer. A boomer is 60 years old and up. Somebody 60 years old and up is not on Robinhood. They are using Fidelity, they're using Schwab, they're using a wealth manager. And BlackRock just told you
that's you made a step there, which I disagree with, right?
Okay, go ahead.
They're on Schwab, yes.
Right.
There's a lot of boomers that are on Schwab that are not using a wealth manager.
Right, but they're using either the Schwab's wealth manager tools, or that they're investing in ways that boomers would invest. Let me back up. Let me make a statement here. A bear market is time, it's not price. People like to say, well, I hope there's a bear market because I'll just buy more if there's a bear market, average down, and in the long run, I'll win. You know what? I 100% agree with you, except if you're 67 years old. If you're 67 years old, that's a boomer. And I'm almost there, myself. I can't wait 10 years if it's going to be like the 2008 peak. I can't wait 13 years if it's going to be like the 2000 peak for the market to eventually right the ship and start moving higher. Sure, if I'm 35 or 40, I can. But that's the problem. That's half my expected life expectancy if you're 67 years old, to wait to just get back to break even. So boomers are not taking that leap and self-directing big numbers of their wealth, and they have the wealth, into a speculative instrument like Bitcoin. Really what it is it's Gen Z and maybe a little bit of the younger Gen X's that are basically doing it through self-direction. Furthermore, JP Morgan pointed out some statistics from CryptoQuant. 16 billion has come into the ETFs, since inception to its high watermark, which was, I think, around March or April, and it's very close to its high watermark again right now. Basically, for the last,
what was the number?
16 billion of
net
right?
Flows. Net of the GBTC, right?
Yes, net of GBTC, 16 billion of net new money has come into those ETFs through their high watermark in April. They're very close to high watermark now. Yeah. In other words, for the last 3 or 4 months, there's been really no new net money that's come in the space. But JP Morgan, according to CryptoQuant, is saying that on-chain wallets have seen 13 billion drained out of them. And they're estimating that most of that money moved to the ETF. In other words, if the ETF is a gateway to adoption, it's doing the opposite. It's taking people that have money on chain and they're saying, you know what, this money on chain is a pain in the ass. These cold storage wallets are a pain in the ass. God forbid I forget my seed phrase and everything. So it's just easier to move it back to my Schwab account and buy IBIT. And that's exactly what they're doing. So they're estimating, and I think that I've looked at all these numbers.
Only question is, do you trust the research of JP Morgan on that specific thing? Like, yes, I don't. I really do not. I really do not.
All right, and I'll give you a reason why. Yes, because they're quoting research from CryptoQuant, and I've gone back and looked at the CryptoQuant data, and they're quoting it correctly. So what they're saying is the net flow, if you factor in the on-chain movement to regulated brokerage accounts, is about $3 billion. That's it. Now, this has been the most successful launch of an ETF in history in terms of net flows of money into new ETFs. These ETFs, IBIT is the record right now.
Right.
But it isn't nearly as big as everybody thinks it is. And it is actually going in cross purposes for building an ecosystem, because it's telling people you don't want to bother with Coinbase, you don't want to bother with an online or a cold storage wallet or any kind of electronic wallet. You want to move your money back to Schwab and you want to buy IBIT. That's not going to get you there. What's going to get you there is what ETH has: lending, borrowing, insurance, trading, DEX. That's what the system needs,
No,
and this is working against it.
So let me be the counterpoint here, okay?
Okay.
So first of all, I will argue with you that there are very few people actually using ETH in that way. Okay. Now I will use as a reference. Have you ever looked at the DApp radar numbers?
I'm familiar with them.
Okay. If you look at them, okay, you will notice that there is about, I'm going to pull them up right now. I'll just give you an example. Okay. 1 second. Let's put them on the screen. Because I've been through this thing. App radar. Okay. 1 second to do my cloud thing. Okay. Share this top thing. Check. Okay. Let's just make sure that, okay, I'm going to see here. Okay. Can you see this screen?
Yes, I can.
Okay. So this, there are total, okay, let's just look 24 hours. There's 100,000 wallets that are interacting with the ETH in the last 24 hours. 100,000, okay?
Okay.
That's it. That is it, okay? Now, let's look at kind of what these wallets are doing, okay? You have 30,000 of them that are just going to Uniswap and just swapping tokens, right?
That's trading. That's trading. That's trading.
That is trading, but mainly with extremely speculative meme coins and other coins. It is not doing anything that is really you're sort of saying lending, all these things. No, this is sort of speculating on random like coins like Shiba Inu. Okay. That's really that is really what it's doing.
Oh,
right?
I agree that, the shit coins are what drives what's going on in Uniswap.
Right. But my point is this: you have 100,000 daily actives. So you have 50,000 people trading a day. That is nothing. Okay. I've said to people, I've sort of said to people,
do they say how many unique wallets a week or a month? Because maybe it's
right here. I'll show you right here. Okay.
So it's 50,000 a day, but how many different? I mean, not everybody trades.
Yeah, sure. A week, you're up to 468,000 unique wallets a week. Right.
Okay. Half a million
transactions. Let's do over a month. Okay. Okay. Hold on 1 second. You have 2 million a month, right? Sort of random 2 million transactions a month on ETH. Okay. Well, I would argue that of those 2 million, 180, I would say 900,000, 1.8 million of those, 1.6 million of these 1.7 million are just complete garbage speculative transactions that have nothing to do with anything. They're just, and it could be bots, by the way, right? A lot of this is bots. Okay. Just bots, just buying, selling, doing whatever. Right. So there's very little real activity in this thing. It's really just quote unquote Bitcoin. It's a shitcoin casino. It's not really doing much. There's not really, there's not really this enormous ecosystem that ETH has been saying. And you really, at the end of the day, what are the top apps on ETH? I can tell you what they are. Okay. They're Uniswap, right?
Right.
And there are OpenSea for trading NFTs.
Right.
And that's it. We stop there.
What about Curve and Aave and Balance?
Okay. Yeah. Okay. Let's throw in the lending. Okay. Let's just throw in Aave. Okay. Those three are all. The rest is garbage. It's like noise. It doesn't matter, right? You've got lending, you've got NFTs, and you've got DEXs. Okay. So you got all those things on ETH, and and by the way, I've been following these numbers since 2017. Okay. And guess what? In 2017, that daily number was 50,000, 60,000. Okay. 70,000. Now, the ETH heads will say, well, most of that money, that activity has gone to Arbitrum and light layer twos, and to some extent they're right. Okay,
Right. Yeah, there's a million L2s that it's moved up to as well.
well, right, but I mean, I'd say Arbitrum is the number one, right? But like,
Right.
but my point is that that is not a significant number in terms of like number of actual people. Okay, now let's just put this in retro there are at least 100 million people who own Bitcoin. Okay, now, and I've heard you say this, they're kind of passive, right? They're guys like me. They just buy Bitcoin and they don't do anything with it, right? We're not. Right. I'm actually one of the few people in the Bitcoin ecosystem that uses Bitcoin all the time. Okay, I do, because I use it for all this stuff, and I'm very interested. And I can tell you, I'm very much on top of all this Bitcoin layer 2s and DeFi and all this stuff. I know everything about it. Okay. As well as I know everything about like these proposals to like OpCat or OpCTV or whatever, right? So I can tell you a lot about that, but that's not going to make a major dent on Bitcoin adoption, right? Because here's the thing: what Bitcoin is it's being used, and it's always been used for chunky transactions, right? So if you look at the size of Bitcoin transactions and you look at them in the 2009 to 2013 period, there were between 10 and 100 Bitcoin per transaction. That's what it was. Okay. Mm-hmm. Now, in the end of 2013, Bitcoin got to about $1,000, right? Okay. So 10 Bitcoin up at that point was $10,000, right? So, we're talking in the thousands of dollars per transaction. That's always what Bitcoin has been. Now, if you go from 2017 to 2020, that number was reduced to 1 Bitcoin per transaction on average. And right now, we're at about 0.1 Bitcoin per transaction, right? So Bitcoin is not used for games. It's not used for DEXs. It's not used for NFTs, right? Very much. Mm-hmm. Although ordinals right now, by the way, in terms of raw number of transactions, at one point it was half of Bitcoin, right? Now it's actually now 6% only of Bitcoin, right? Right. I looked at the numbers a week ago. So it's only about 6% of Bitcoin. So Bitcoin is mainly right now its use case is I've got some money. I want to take it out of the banking system. I want to take it out of the financial system. I want to park it for a little bit and I want to move it somewhere else. That's the use case of Bitcoin. All right. Well, let me go in there. I agree with everything you said. And here's the problem. Bitcoin was $69,000 in November 21. And in July of 24, it's $57,000. What's the problem? That's it. You're at $100,000 ceiling with the argument you just made. You need to get broader adoption in order to start moving to higher levels. And the broader adoption is not going to be everybody comes running to this, because they're looking at the financial market and they're seeing a strong dollar. They're seeing an all-time high in the stock market. They're seeing booming AI stocks. They're seeing an economy of 4% inflation. 4% unemployment. And they're concluding, yeah. You guys are doing your thing over here, but you ain't done shit for 3 years because you've wrung all the adoption out of what you just explained. You need DeFi, L2s, and everything else. And you can argue it's coming. But it's not here yet. And now you've got the ETF working at cross purposes. It's dragging money back into the regulated financial system. Look, let me make one more statement. What you need is to not wait for Larry Fink to tell you you're doing the right thing. You need to, I'm not you personally, I mean the entire crypto space. You need to be plotting a way to put him out of business. If you want to be blunt about it. Here's my plot, Jim. Okay. My plot is this power law. You familiar with it?
Yes. It's a little small. I could see that. By the way, I see some of the messages. You absolutely do need L2s. You need trading. You absolutely do. Like I said, enjoy 70,000 for the next several years. If you do not, I'm responding to some of the comments that I'm seeing. Okay. Well, enjoy 70,000 for the next couple of years, because you're going to need something more to go to the next level. And what I'm afraid of with the ETFs is you're going the wrong way. Now, what about the power log?
Okay, so first of all, have you spent any time with this power law?
No. So
okay,
tell me.
Let me explain this power law. Okay, So if you look at this power law, you have two axes, right? And on the vertical axis, I'm plotting Bitcoin, but I'm plotting it on a logarithmic basis, right?
Yes. Yes.
Okay. I'm
Very familiar
also
with log
plotting.
charts.
I'm
Very
also
familiar with log charts.
exactly. But here, this is not just a log chart; it's a log chart. So the
Okay.
time is also on a logarithmic scale.
Very familiar with that too. Okay.
Okay, great. So if you look here, the green line is a trend line. Okay.
Okay.
This trend line has an R squared of 95, 96%, depending on
Until
how
it
you
doesn't.
well, okay. It has an R squared of 96% spread over 6 orders of magnitude from when Bitcoin was at 10 cents to when Bitcoin is at about 100,000.
Okay.
Okay. All I can tell you is I have a PhD in math, and I can tell
Mm-hmm.
you that you will never see such a chart ever in anything with that kind of numbers. Okay. And if you look at the red line, which is the sort of the support line, which is sort of one standard deviation in log space under the green line, it is hard to unsee this graph, right? So you could say it's just a model. It is a model, but it happens to represent.
It's a one-factor model, and I'm always very skeptical of one-factor models.
You can be skeptical all you want, but I'm just telling you this model.
It's a one-factor model. They work until they don't. I can show you 1,000 one-factor models that probably had better R squares than this that stopped working in TradFi.
Okay. Well, I can tell you that this power law model is, it is, you can't say models are bad. You can say this model is not bad, but you can't say models are bad in general. You use models. You use models.
Oh, yeah. I said
you're
it's
a big model guy. What?
Yes. And I said it's a one-factor model is what I said.
And the amazing thing is you get an R squared with one factor, only time. That's the only factor. Okay.
Right. Until you don't.
Okay. But
that's the problem with one-factor models.
No, that's not the problem. Why are you getting this thing? Because the adoption of Bitcoin is growing as a power of time as well. Okay. So if you look at how many people are buying a Bitcoin over time, let me pull you up this. I'm going to pull up this little thing. Okay. I'm going to just change the screen 1 second. Okay. This might be a little hard to see here, but if you look at this screen here, this is the amount.
Control plus and blow it up.
Okay, let's try that. Oh no, the other way. I don't know if I can. Okay. That's about this little graph here, okay, is the amount of people who have 1 Bitcoin over time expressed in log space. It has a 98% correlation with time. What is that telling you? That tells you there is more and more and more and more people who are buying Bitcoin over time. Good markets, bad markets, they're buying Bitcoin. So it's not just a model that's based on nothing. We've just observed this thing like, we're tracking fruit flies and we noticed this correlation between fruit flies and the Bitcoin price. No, we have this clear model that people are buying Bitcoin. Now, I could do 1 Bitcoin. I could do $1,000. I could do $100. I could do 10 Bitcoin. I can do any of these things. I all get these power laws. Okay. So it's very clear that the adoption of Bitcoin is happening. Okay. Now
has happened.
Absolutely.
By the way, let's not lose sight here of something.
Okay.
As I said at the beginning, I'm bullish on Bitcoin. I want it to go up. I am long Bitcoin.
Well, all I'm just telling you, Jim,
my argument has been that we have so oversold these ETFs. That's where we got involved with this. And that these ETFs are not delivering what you want, and they're actually going in the wrong direction. You just gave me charts that are talking about Bitcoin adoption, and I just gave you data that your Bitcoin, now it's small numbers, it's not going to show up in your chart, that these ETFs are reversing that because it's sending money back to the TradFi system is what it's doing. And that is a problem in the long term for Bitcoin.
Bitcoiners like me, or Michael Saylor, or Bill Miller, for that matter, who's on this chat, right? I think we don't care where the Bitcoin's bought. We don't care if you buy it in an ETF, if you buy shares of MicroStrategy and they buy the Bitcoin.
So you think that the use case for Bitcoin is done and complete, and we don't need to expand the universe of things you can do with Bitcoin. That's what I'm arguing. You need to expand it. You need to be plotting how to put BlackRock out of business, not getting Larry Fink to bless you like, oh, the high school quarterback, he's noticed me and he knows my name and I'm all excited. No, you need to put him out of business. That's what you got to be plotting to do.
Here's the thing. We're not going to put Larry Fink out of business. I'll tell you why we're not going to put him out of business, okay? The reason we're not going to put him out of business is that custodial wallets, and do you use a multi-sig custodial wallet?
No, I don't.
Okay. Let me tell you, if you're using first of all, if you use a single sig wallet, you are asking for trouble. I will just tell you right now, you are totally asking for trouble. I'll tell you why. Because
you're getting to the biggest problem it has right now.
What? No,
you're getting to the biggest problem the crypto space has right now.
Well,
it's the custodial problem. It is a big problem.
It is not a big problem because here's the thing. The ETF solves that problem for a lot of people. Okay. So first of all, if I buy,
it does, but it takes money off chain and puts it in regulated brokerage accounts. So then Gary Gensler can come in and put all kind of rules on you and what you can do with it. And that's not where you're going to get. You're not getting to the promised land that way. That's the problem. You got to get away from Gary Gensler. You got to get away from the TradFi system, not bring everybody in. They're going to put rules on you like they did the Canadian trucker.
How long did it take you? How long did it take you to get comfortable putting, let's say, a substantial amount of money, let's say over 10 grand, over 100 grand on a single sig non-custodial wallet? How long did it take you to get comfortable with it?
It took a couple of years because I started off in a GDAX account, which eventually became Coinbase Institutional.
Of course, right?
Right. And that to me is the biggest. If you can't get people to go that step, and what I'm trying to argue is the Bitcoin ETF is not the gateway to get them there. It is going in the other direction. It is saying it is arguing what you just said. These wallets, self-custody is too damn difficult. I'll just put it back in my Schwab account and buy IBIT. If that's the case, we're not getting there.
But I have no problem that they do it. Here's the thing. Can I tell you? Most people can't handle single sig. Right? They can't back up their seed phrase. They literally cannot back it up properly.
I 100% agree. I 100% agree. This is the biggest problem crypto has in getting on-chain adoption. Is self-custody is 100 times better than it was in 2017 when I started in this space. But it is still way too damn difficult for the average normie to consider even attempting it.
Well, I don't disagree, but I will say, and look, I use multi-sig solutions, okay, and I just a little plug. I use Casa. That's one of the solutions. There's really two great solutions for Bitcoin out there. There's Casa and Unchained Capital. Unchained is also excellent, okay, but you're going to need to use multiple hardware wallets in multiple locations.
Too damn difficult.
I know. I'm just telling you.
If you're going to do that, then give me the ability to borrow and lend and trade and pay my bills and pay my taxes and invest on chain into other tokenization objects or equities or something like that. None of that exists. So why would anybody but Fred go through that trouble? It's a couple of thousand people that do that. That's all it really is.
Well, it's more than a couple thousand, but I'll tell you what you
multi-sig. You think multi-sig self-custody is more than a couple of thousand?
Yeah, I do. Because I actually know the people who run these companies, and it's more than a couple thousand. Okay. So if you look at Unchained Capital, for example, I think they have about $8 billion. Okay. It's not enormous, but they've got $8 billion. Okay. There are other, so I would say if you're going to store, let's say $1 million in a non-custodial wallet, you better use a multi-sig solution, right? Because
100%
otherwise,
agree.
anybody gets your seed phrase, you're dead. Okay.
100% agree.
You can't be in a situation where I walk up to Jim Bianco's house and I come with a wrench and I say, Jim,
Oh yeah.
can I have your
Yes,
ledger?
the wrench attack. I'm very familiar with that. I'm very familiar with that.
So you can't. So you absolutely need to be, completely 100% protected against that. So, but anyways, I think we're going to disagree on like what the thing needs. My view is Bitcoin doesn't need the ETF. It doesn't need it. Like Bitcoin's going to go to 1 million regardless of the ETF. Okay. I think.
So my view is the same as yours with a qualifier. Bitcoin's going to go to 1 million regardless of the ETF, provided it expands its ecosystem. And the ETF is not helping that. That's the only thing I would say.
I will also say I am in favor of Bitcoin adopting its ecosystem. Okay, I'm in favor.
Right. That's to me is why the price is. That's why the price is.
And by the way, that is happening. It's happening slowly because everything with Bitcoin happens slowly, right? It's not like ETH. Even ETH is kind of slow, but you know what I mean. It's not like some chains where they just decided overnight. It's not going to happen overnight. There's a lot of security things. Bitcoin is the security layer for crypto. It is.
I understand, and I agree, and it is going to happen slowly. And part of the problem with slowly is that's why you haven't been able to get above 70K for 3 years. And that's what I think that it really what's going to take the price to 100 or above is going to be devs telling you that they've got new use cases or credible use cases are coming. It's not going to be this argument that all the boomers are going to put 5% of their money in crypto. Boy, by the way, Fred, you've been on here long enough. I've heard that argument for 40 years on gold, and it hasn't worked on gold.
Do you own more ETH than Bitcoin right now?
What's that?
What do you own more of, ETH or Bitcoin?
Right now it's about split, but probably a little more ETH. Probably 70% ETH, 30% Bitcoin right now.
Okay. And if you had to say, like, what's your total exposure to crypto? Is it under 10% or?
Yes.
Okay. So you have like under 3% of your net worth in Bitcoin.
Yes.
You're pretty light on Bitcoin, right? You're not.
Yeah, I'm a TradFi guy. Okay. I'm all in. I run my own ETF. I get it. So I'm a TradFi guy.
Okay. So let's switch to macro a little bit. I want to get your macro. You are a good macro guy. I actually got to tell you, I've been following you way before you reemerged on the scene as a Bitcoin ETF hater. And I always
You're not a Bitcoin ETF hater.
You are a Bitcoin.
No. See, this is the maxi religion is that if you don't give 100% fealty, you're a hater.
No,
I'm just saying that there is a reason you haven't seen a new high in 3 years, or you haven't gotten above 70,000 other than a couple of days for the last 3 years. There's a ceiling out there, that ceiling is you need to expand the ecosystem.
We were at an all-time high in March. I mean,
but it was $4,000 above the 21 high, and now it's at 57K.
That's what happens with Bitcoin. That's what Bitcoin does.
I know. And TradFi's outperformed it now for 3 years.
Oh, okay. For 3 years. How about for 5 years?
Well, give me a time machine so I could go back and buy it. But the point is it's not doing it anymore.
Oh, okay.
Your QQQs have made you more money. Your QQQs have made you more money than your Bitcoin over the last 3 years.
Okay. Yeah, we can always pick the starting point, but this year my QQQs are up 35%. Bitcoin's is up more, like 45. Okay, this year to date.
Okay,
so Bitcoin is outperforming my Qs today, right? I know I own both, and look, I would love the Qs to go higher. So what's your view? Okay, let's switch super big macro. What's your view on the presidential election and Fed funds? What happens with Fed funds?
what happens with Fed funds? So I hold, all right, so let me back up and let me make a quick 2-minute statement here.
Okay.
I hold an unconventional view, maybe it's not unconventional, that the bottom in inflation in the 40-year bull market in bonds ended in 2020. We are now in a higher inflationary world, and we are going to be in a higher interest rate world. To that end, some of I wrote my Q2 investor letter to my ETF and put it on my Twitter feed yesterday. Now, the reason I say that is this, what I'm about to say is in there.
Okay.
If you look at the market, I think the biggest question when it comes to Fed funds is what is the neutral Fed funds rate? So everybody talks about the Fed's got to cut rates. How much do they have to cut rates is really what I'm asking. How much do they have to cut it? If you ask the Fed, they think they got to go to 2 3/4. If you ask the market, they think they got to go to 4%. 4% is now the new neutral rate. And so when I look at 4.30 or so on the 10-year note, and a little above 5%, 5.25 on the Fed funds rate, we're not that far above neutral. Now, why is that important to point out? Because for all the belly aching that the Fed's got to cut rates and that interest rates are punishing the economy, it really isn't. It really isn't, because it's not that high above the neutral rate. That's why the economy continues to expand. That's why we continue to see consumption being strong. And that's why we continue to see inflation staying high. Cycle is turned. The zero interest rate world is over unless we get a complete collapse in the economy. But short of that, we're not going to naturally go there like we were from 2010 to 2020. We were expanding the economy and we were in a 0% interest rate world. That cycle's over. Okay. We're in a much higher interest rate cycle. So to answer your question about Fed funds rate, that's kind of the short answer of how I've been viewing it.
Okay. So what about the following scenario? Trump gets in, and Trump has said fairly recently that I would like interest rates at 0 or below.
He's a developer. Yes. He says that all the time. Yes.
Okay. He has plans to exercise extreme control over every element of the economy of the U.S. enterprise, including judicial, right? Which I'm not in favor of.
Right,
but
and
certainly he's gonna put his thumb on the Fed. Certainly, right?
Right.
So
yeah, at a minimum, if he gets in, and it looks very likely he will at this point, because we don't even know who the Democrat candidate is at this point. But at a minimum, he's going to fire Powell at the end of 25, because his term comes up in January 26, and he'll put his own guy in place, and he
that's at a minimum, but at a maximum, he's going to
send SEAL Team. At a maximum, he's going to send SEAL Team 6 into the Fed to remove Powell the day after inauguration.
That's, I think, actually the real minimum. I mean, actually think there's no way Powell lives on under a Trump administration.
You mean career-wise, not literally?
Yeah, career-wise.
Right? Yeah.
I mean, look, this guy will put Powell in jail for something. I have no idea. Right.
But so let me make a statement to you. If I'm right about that, this is a higher inflationary world, and we saw this last year as an example. If Trump decides to send in SEAL Team 6 to remove Powell, to put, he's got a committee headed by Arthur Laffer that's trying to find the next Fed chairman. And Arthur Laffer's decided that the next Fed chairman should be Arthur Laffer, by the way. He literally has come out and said that.
He's still,
he's 84 years old. He's 84 years old.
Okay.
Anyway, getting to the point, if he wants to try and bully the Fed into lowering interest rates, 10-year goes to 6 or 7%. It blows up. It goes the other way. The only way the market responds to lower funds rate by lowering those longer-term interest rates, if it credibly believes that the inflation problem is behind us. If the Fed starts jamming rates lower and the market believes you're stimulating that's going to cause inflation, get me the hell away from the 10-year, and it goes straight up in yield. What's my example of that? Last year Last year, when the Fed stopped raising rates, July 26th last year was the last Fed rate hike. So we're coming up on the 1-year anniversary of it in a couple of weeks. The 10-year note was at 380. And everybody on Wall Street said, oh, great, the Fed's done. And they were right. The Fed was done. What happened over the next 90 days? 10-year went to 5%. Why did it go to 5%? You're not credibly going to fight inflation. I don't want to own your bonds. What happened in October? Economy started to slow, and there was some evidence that oil was over past its peak. And then there was a little bit of an exhale about the idea that inflation was not going to reignite to the extent they did, and rates came down. But today they're at 430. They're higher than the highest rate in all of 2022 for the 10-year yield was 422. And today we're at 430. And in 2022, we had a 9% inflation rate. So here's what I'm trying to argue. Trump can do whatever he wants, and he can put Laffer in or leave Powell in and force the funds rate to zero. He does that, and the market does not think that the inflation rate's behind us. We're going to see the bond market collapse. We're not going to see the bond market have a massive rally. The only way we'll have a massive rally is if it agrees that the inflation rate is done and it's going back under 2%. I don't think it is. I think we're in a 3 to 4% inflation world. And I would argue to you what I said before. The market, if you look at, I'll give some technical things. The 5-year swaps rate, which is basically a deconstruction of the yield curve. What is the 5-year yield going to be in 5 years? It's 390 right now. What is the lowest Fed fund futures rate over the next 4 years? What is the lowest it gets over the next 4 years? 370 or 380. So the marketplace is starting to think that the neutral funds rate is closer to 375 to 4%. How do you justify 375?
Okay, what if
a 3% inflation world? It's a 3% inflation world.
What if Trump cuts interest rates down to Fed funds to 2%, and we have the 10-year go up to 6%?
Oh, then we have a massively steep yield curve.
Oh, I agree.
Saying.
Yeah.
What does it mean?
What's the damage? Okay.
The damage.
The Treasury continues to fund itself at 2%. They're just going to fund everything short term, and they'll let the bonds. They'll let the bonds do what the bonds want to do.
Because then at that point, if you see a 10-year 6%, or you see it start to go to that level, then you can credibly argue. Now we finally have very restrictive, punishing interest rates. That those real rates are too high, and now we could start to see it retard the economy, but not 430. That's not doing it.
Why are stocks where they are with the 10-year where it's at? Why are 10 years not?
Because if you want to answer
it's on a valuation basis,
because the 10 years not that punishing. It's not hurting. It's not retarding things. It might be hurting the housing market. It might be hurting mortgage brokers that are looking for refinance business. I get it. It's not good to be in that business. It might be dragging the commercial real estate market, but that's not enough to drag the entire economy. And so that's why the 430 10-year note is not a punishingly high rate. That's why the stock market is able to handle it.
Okay, so you have no scenario in your playbook for a major correction of equities.
A major correction in equities could come independent of interest rates. So you were asking me about interest rates.
I'm just sort of in general.
It could come independent of interest rates. Look, let me throw in another scenario. Let me throw in something in another.
I just want to put it into context, right? Because you sort of said Bitcoin is super speculative. Boomers don't have anything to do with it because they only got X amount of time left on the planet. So they can't run
the bear market.
They can't run the risk. However, 60% they should put 60% of their money in completely overvalued stocks. Now I'm long a bunch of those.
Well, actually, where boomers are putting their money, there's a Wall Street Journal story about it today, is that the flows into fixed income is going to be an all-time record this year through the first half of this year
because it's a flight to safety, right?
Right. Where's a boomer putting his money? Yeah. He's putting his money in a 5.3% money market fund, or he's putting it in a 5% bond fund. And you know what he's saying to himself? I'm going to go to bed and the shit can hit the fan and everything could go to hell. And the government is going to pay me 5%.
60% of my Wall Street friends, or 60-70% of my Wall Street friends, are doing exactly what you just said. Okay.
Because if you're older, you should be. If you're younger, like I said, if a bear market is time and you're 67 and you're incredibly going to live to 87, you can't wait 10 years. That's half your life expectancy just to get back to your high water mark. Because many bear markets may take 10 years to do that. If you're 35 to 45, just keep waving them in, man. Because if it's going to take 45, you're fine.
Perhaps, and I think you're open to this. The entire financial system that you and I grew up in, right? Like I came into the financial system 15 years after the end of the gold standard. I mean, basically, I was trading. I was on the floor, on the 42nd floor at One New York Plaza at, trading bonds in 1986. Okay. That was what, 15 years after the gold standard, right? But maybe this financial.
Did you know Michael Lewis?
Yeah, very well.
Okay.
Yeah, very well. Yeah, very well. And I can tell you that the Liar's Poker, right, was actually based.
Why don't you tell everybody what we're referring to? Michael Lewis, the author.
Yeah.
The new thing, the blind spot, blind spot, and all that. He started off as a bond trader at Salomon Brothers in the mid-80s.
He wasn't a trader.
He was a salesman. He was a salesman.
So he was on what we called the hedge desk, right? And so we had this desk called the hedge desk, and it's sort of we were selling to people. We're selling hedge instruments to them, So like you should buy a swaption, or you should buy a cap on interest rates, and so on, right? So basically, we had these kind of complicated interest rate products, mainly caps and swaptions, things like that, or swaps, and we sell those via the hedge desk. And Michael Lewis was in New York at the hedge desk, and then he quit, right? And he quit, and his role was taken over by David Weil, who was my partner at Greenwich for 3 years. And David Weil was the main character in Liar's Poker. He was the model for the person named Alexander. If you ever look at that book, and he's like Alexander. So he's sort of this brilliant trader. And he's also, by the way, in Bonfire of the Vanities, he was Tom Wolfe used him as the model for the Giscard gold bond. If you remember that. But anyways, so yeah.
And shout out to Bill Miller. Michael Lewis also wrote the SBF book too last year.
Of course, yeah.
So that's who we're talking about.
Right. So, but look, I just to get back to my point. My point is, I think we go through these phases, right? And is the entire financial system potentially going to be completely rewired? And I think it will. Okay. I
agree with you. This is one of the reasons why, let me come back. I'm a TradFi guy. I work in the TradFi system.
Right.
Why am I talking about Bitcoin and getting all interested in digital? Because I think that the TradFi system is ripe for disruption. And I think that the digital system, or the crypto, is that instrument to disrupt it.
I agree.
And that's why when I say that you're dragging money back into the TradFi system through the ETF, I throw up a red flag and go, going the wrong way here, guys. We got to be going the other way. And that's what my biggest problem is. Yes, I think that it's like newspapers, and it's like and hotels and taxis. Healthcare is coming now with the disruption, and the financial system is ripe for disruption in a big way.
So if you believe that we are up to a seismic change, a generational change in finance, right? I agree. I think you want to have some significant bets in that overall wave that's happening. That's going to come. Okay. It may not come this year. Okay. You can agree. Now, I think you've sort of said, well, it may come next cycle, right? That everybody's going to get comfortable, and everybody's going to, all the, the advisors and everything are going to get comfortable. Yeah, right. I don't know. Like they're clearly not there right now, right? The advisors are clearly, and BlackRock has said it. I'm in agreement, right? It is self-directed trading right now, right? But But we still don't have this offering at Morgan Stanley. Okay, I have an account at Goldman. I can't buy Bitcoin ETFs at Goldman.
Right. You know what I think it needs is, if I was to throw you a parallel, AI, the word AI was invented about 100 years ago, in science fiction. But what really set off this latest AI boom was ChatGPT 3 about 2 years ago. And it really took off because it was like the eye-opening killer app. That's why I say you expand the ecosystem of Bitcoin, and you get the devs working. At some point, that killer app, whether it's a payment system or a trading system or something along those lines, that everybody goes, whoa, 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 now I get it. Now I know what I could do with it. There it goes. There it goes, man. It just starts going. And that's what we're kind of waiting on. Kind of like if you go back 3 or 5 years ago, that the AI stocks or the speculative technology stocks were really waiting on. And it really was, the bell ringer was ChatGPT 3 that made everybody really open their eyes to AI. And that's when all the stocks went up, and NVIDIA kind of led the charge.
But look, AI, I think AI is, it's the next industrial revolution. That's clear to me, right? Like we're looking at AI. AI is not like social networking. It's not just a cool thing that you can play with. People realize now that AI is going to be transformative in the same way that, if you were making, porcelain pots in France in the 1700s, and you start seeing, this invention of the steam engine, you're going to be like, wait a second, this maybe it's going to change things, right?
Right. Can I answer a question?
Yeah.
Can I answer a question here from the chat?
Go ahead. Yeah.
Why wouldn't boomers allocate 5% to Bitcoin? Because they're 2 cycles behind. They're talking to their wealth managers about allocating 5% to AI. That's where they're at right now. They're talking about them allocating 5% to tech. That's where they are right now. That's why I said, when you say, why aren't they going to Bitcoin? Because what do I do with Bitcoin? What do I do with it? They're waiting for that killer dev app to come.
Well, this is
sets the light bulb off in their head.
Here's what I think Eric Balchunas from Bloomberg, the way he looks at it is this. He goes, look, the 60-40 is really, it's now ingrained in people's psyche, right?
Right.
It really is. Like, whatever. Should it be? When you and I started, stocks were not that. People were not like, you have to invest in stocks. I mean,
no. When we started, it was probably closer to the viewpoint of Bitcoin is today than anything else. All stocks were a speculative vehicle when we started.
People were looking. The 41st floor at Solomon was stocks. The 42nd floor was bonds. We were the masters of the universe, and we had the stock guys who were kind of second-class citizens. I mean, that's
right.
Really
Equities in Dallas. Remember from the book, from Larry Spoke,
right? Yeah,
which turned out, ironically, to probably be the best place to go, because that's where, going down to the southern half of the country, out of the Dallas office, you got all the hedge funds.
Exactly, that is true. But but like people, so the world has completely changed, since we were there. And by the way, the other thing that's completely changed is high net worth. I remember the private investment group, the PID group at Solomon. Right. There was I remember we had to go. We cater to people with a net worth of 50 million and above. And I'm like, oh, how many people are there like that? And he goes, you could fit them in this room, Fred.
Right.
I mean, so things change, right? Things absolutely change. But I think, look, I disagree with you on the use case here. I think that the killer app of Bitcoin is killer app of Bitcoin is going to be, we break 100,000 very conclusively and everybody wants it. That's what I think. Okay.
Oh,
and by the way,
I don't disagree. I don't disagree that there will be some kind of FOMO if you break 100,000. I don't.
No, not if, Jim. When? Okay.
Okay. Fair enough.
If you don't think we're breaking 100K, I don't know.
I should have used when, but I agree that there will be some kind of FOMO. Look, you could argue that there's some FOMO going on in the market right now, that you've seen a couple of decent days of inflows.
The market has been battling. Let's just look at what this market has been battling. Okay, you mentioned the Well, we haven't done that well. We have been battling Sam Bankman-Fried's estate selling. Okay.
I agree.
Okay. And by the way, a lot of that money is going to do a round trip right now, right?
Right. No, it's already profitable. A lot of that money is profitable.
Well, it's all in cash and it's waiting to be distributed.
Right. There was a yes. It
$14
is.
billion are sitting there.
It's done. It's done. In fact, there was a intellectual exercise that people said, well, if at the end of the day no one actually lost any money out of SBF because the price
they didn't lose it in fiat. I'm going to put
on a fiat measure basis.
Terms,
they didn't in fiat terms. They didn't lose money.
Right, but
somebody asked, was there actually a fraud? And somebody said, was there actually a fraud? And somebody said, well, if I rob a bank and then invest it in something that goes up and give the bank the money back, did I still commit bank robbery? And the answer is absolutely you did. You're going to go to jail if you committed bank robbery.
My point is this, you have $14 billion, not $14 billion hit that were, but you have like at least $3 billion of GBTC selling that was FTX related. Okay.
Right.
3 billion. Right. Okay. Now you've got Germany dumping 3 billion and you have Mount Gox.
I agree.
Doing 2 to 3 billion. So,
but how much of that's going to get converted to fiat? How much of that are those holders actually going to turn around and convert it to fiat?
Well, I'll tell you one thing: the FTX stuff probably going to go right back into Bitcoin and ETH. I got to tell you.
I agree. So I don't think the selling pressure of that stuff is going to be that great. But
but I'm just saying this is a buying pressure. Right? This is going to come right back into Bitcoin. So, next week we're done with Germany. They're done. They're going to sell out. They'll have sold out of all their positions. Jawohl, mein Kommandant. Okay. They, you great. Good news. You got rid of your Bitcoin. Bad news is the Bitcoin now can go way higher. Okay. We've got the redistribution from FTX.
Fred, I got to go answer that. Can we take a 30 seconds?
I really enjoyed it. And
you want to cut it off here?
No. Let's keep on going.
I'll be back in 30 seconds.
Okay, no problem. All right, guys, let me take a few from the audience. Everybody enjoying this? A minor capitulation, 100K easy. Yeah. Okay. Yeah. Germany. Yeah. I mean, Bill. Yeah. Germany. Like Germany is. I mean, it's so obvious why did we go down? Because Germany sold $2 billion worth of Bitcoin is why we went down. That's very simple. It's not that crazy. I'm kind of surprised that Jim Bianco is not more into the power law. I think Bill Miller. I would love. By the way, first of all, your dad is in my book on Bitcoin, and I've been a big fan of Miller Value and Oak Tree for a long time. So anyway, I'd love to get you a copy of the book, Bill, when it comes out in about a month. So Jim, where were we? Okay,
I think I'm back now.
Okay, 100K.
I'm sorry.
FOMO. I mean, FOMO is the ultimate driver, I think. And I think, the question is the first thing you said, look, Fred, nobody can deal with self-custody. And I agree. And especially, who can't deal with it? Old people. They can't deal with it. They can't deal with it. Look, I have a very good friend of mine who's started one of the largest VCs in San Francisco. Okay. Very wealthy guy. And, we talk all the time and he's like, I can't deal with this. What is these keys, all this stuff, Fred? And then I'm like, look, just buy the ETF, man. He's like, yeah, okay, cool. I'll buy the ETF. So look, this is such an easy thing to get him into Bitcoin with his ETF relative to trying to convince him to he can't deal with this. Guy's over 70, and it's one thing.
Right. But I would say to you though that I agree that FOMO will help. 100K will help. Yeah. But let me also throw out at you, if you look at the panoply of things that, let me back up. Let's remember who has the money. It's boomers. Boomers have the money. Older people always have the money because they've spent a lifetime saving and investing. That's why they have the money.
Right.
And so you want to get their attention and you want to get their FOMO. The problem is the boomers are FOMOing into AI right now. The boomers are FOMOing into tech right now. The boomers are FOMOing into equities. They might even, they're FOMOing into bonds. Why are they FOMOing into bonds? Because they finally have a yield for the first time in 15 years. They could get a 5% yield out of them. So there's a lot of things that they're being preoccupied with. And if you want to tell them, well, look at Bitcoin broke 100K, the market cap of NVIDIA is twice Bitcoin. That's probably consuming more of their attention right now than Bitcoin is. That's what they're probably talking to their wealth managers about. Should I be in the Mag 7 stocks? Should I be buying those stocks directly as opposed to QQQ or as opposed to something else like that?
You know what? Bitcoin's in that list now, right? So what's that list? It's NVIDIA, it's Google, it's Amazon, it's Microsoft,
it's
Apple,
Meta. Yeah,
it's Bitcoin. Okay, I'm sorry. It's Bitcoin's in that list right now. It's Meta. So
right.
Is it at the top of the list? No, but it's in the list, right? Bitcoin's in the mix right now. And
but let me push back on that. If you look at the ETF, the adoption is about 3 billion if you figure the on-chain money that has come back into TradFi. And then if you look at what's that?
I dispute that.
Okay. Then, but BlackRock has already told us. BlackRock has already told us 80% of that money is coming from self-directed online brokerage accounts. That's not a boomer. That's not a boomer.
Okay, I'm not saying it is, but I'm saying look. Those boomers, they're slow movers, right? They're slow movers. They take their while, right? They're going to get involved at 100K. That's when they're going to get involved. Okay, they're not buying dips. And this is one of the things I said from the very beginning. I said, listen, if you think Wall Street's going to buy your dips, you're wrong. Okay, generally speaking, they're like horses. They get spooked. You know what I mean? They get spooked like everybody else. And I'll tell you something that's pretty interesting. March 15th. That's when the market peaked here on Bitcoin, right?
Right. 74K, March 15th. Yep.
Yeah. So I know somebody who sold $1 billion worth of Bitcoin that day. You don't think that had any impact on the market?
Oh, sure it did. If somebody sold $1 billion, because 2 days earlier,
I know a person who sold $1 billion of Bitcoin that day.
Now, when you say sold, I assume that they converted to fiat is what you mean by sold?
Yeah, exactly. Yeah. Okay.
Yeah. But 2 days earlier, March 13th was the $1 billion inflow day, which was the high water day for the ETFs.
Yeah. Yeah. But what I'm just saying is people get spooked. The people are, Wall Street's a nervous Nelly. And, I definitely think they're just like everybody else. I don't think that they're necessarily going to bail out. And so I think calling them like you do degens is a little unfair. And a lot of people have said, why does Jim Bianco keep on calling us all these ETF buyers?
All right. So let me stop you there. And let me say that I've stopped calling them degens, and I'm going to apologize for calling them degens. That was too inflammatory a word. It kind of detracted from my argument. Well, I get it. I'm sorry I called them degens, but they are small retail momentum players. If you want to, that's what I meant by degens. So I'll refer to them as small retail momentum players.
Have they bailed on all their buys?
They've stopped buying.
They stopped buying, right? They stopped buying. They didn't bail. I don't think
they haven't bailed. I agree. They have not bailed. Their staying power has been surprising, but is that enough for a market that is going to go to several $1 trillion? Or do you need institutions, and do you need more hedge funds that are not just doing basis trades? And do you need boomers and wealth managers and all of the above? Yes, you do. You do need
it. You don't need it, but it's icing on the cake. Okay, we didn't need it.
I disagree. I think you need more. I think you need more than just Gen X and Gen Y.
I don't think that there's
or Gen Z.
Or some kind of God, some limit that was set by God as to how far Bitcoin goes.
Right. Somebody said they're coming. Yes. Look, let me remind you. I'm sorry I'm not giving you 100% fealty. I am long. I like it. I think it's going up. But what you need is more development. You need a wider ecosystem. That is my argument. If you stop here and get no more development, or the development becomes like the Lightning Network, which really kind of fizzled out. It's been around for 8 years now, and it's really hasn't really gone anywhere. If you don't get that development, I think there's a ceiling to it. If you can get that development that you are absolutely creating an alternative financial system and not just a fixed inflation permissionless digital coin, then watch it go. But if you're just going to have a fixed inflation digital coin, there's a limit to how far it can go. Okay. And it's taken it a long way. That was good enough for the first 10 or 12 years. But I think the next step, you got to go the next level. You got to go more than what we've got right now.
Okay. I think we made our points. I think look, Jim, it was great talking to you.
I enjoyed this.
I think everybody enjoyed it. I think it's been a great discussion. And I love the anecdotes. And what part of the country are you based in, by the way?
I'm in Chicago. I'm in downtown Chicago. I could actually walk to Wrigley Field if you're familiar with Chicago. Okay. Yeah.
Well, my nickname.
Where are you? I'm
in Los Angeles. And by the way, my nickname at Solomon was Fred Krueger the Merc. Because I'd always be like, Fred Krueger the Merc, pick up Fred Krueger. And people were like, they should call that guy Fred Krueger the Merc. So that was my name. Anyways, Jim, great talking to you. Let's do it a little, sometime in a couple months and see where we are and if we hit
when the price goes over 100,000, I'll come on and apologize.
Okay, sounds good, Jim. I'll talk to you later.
Okay, take care, guys. Bye-bye.
Bye-bye.